All right. Good evening, good afternoon, good morning, ladies and gentlemen, from wherever you are at the moment across the globe. A warm welcome to the joint webinar of ACCA and CFA Society Indonesia for Introduction to Climate Finance. So I'm Julia Simatupang from Indonesia. I'm the country manager and chief representative of ACCA Indonesia, and I'll be your host for the next 60 minutes of this insightful session. And thank you so much for joining this webinar. We are thrilled to have more than 200 participants tonight. So thank you so much for joining this call from wherever you are. And we are thankful to be here as ACCA and CFA Institute has jointly collaborated on developing a course of climate finance. And today's webinar will find the intersections of finance and climate actions. So I think particularly the issues of climate disaster are getting more relevant today, like heat wave in Europe, wildfire in Hawaii, a storm in the US, and closer to home here in Jakarta, we are facing an air pollution issues here in Jakarta. So before we begin, allow me to share the rundown for tonight. We're going to have a fabulous people from CFA Society Indonesia and ACCA, and of course from CFA Institute to provide their welcoming remarks. And they'll be followed with the main session. There will be a presentation by our speaker for the introduction to climate finance. And then later, all the participants will have the opportunity to ask questions or share your comments on the Q&A session. And don't forget about our closing remarks to this webinar. Also, we will provide it before we close this webinar. All right. So therefore, let's start with the welcoming remarks from CFA Society Indonesia. Let's welcome Pak Triyono Sudirjo, the Vice President for CFA Society Indonesia. Pak Triyono, camera is yours.
Thank you, Ibu Julia. Can I be audible?
Yes, we can hear you back.
Okay, so let me start. Thank you very much for the collaboration between ACCA and CFA Society Indonesia. I think I myself, as an investment professional working at one of the big four, I can appreciate that ACCA is one of the professional organization of the professional designation that promotes professionalism in the area of accountancy. So I think there are a lot of things that we can do together between CFA and ACCA. I hope in the future, looking forward, that we can work further together. A bit of introduction about CFA Society Indonesia. Our vision is we want to empower the financial profession in Indonesia by promoting the highest standards of ethics, education, and professionalism. So our mission, we want to serve all the finance professionals in Indonesia who seek for industry-related education, knowledge, professional development, networking, sharing, or inspiration. So the topic tonight is very relevant because as investment professionals, CFA charter holders can no longer focus very much on purely creation of shareholder value from the commercial perspective, but also have responsibility on the climate as well as on the social as well as on the governance. Currently, our members are approximately around 330 people. 98% are charter holders. Our retention rate is around 95%. We're still predominantly male, and majority our members are their own dues-paying members. The profession for our members are predominantly investment analysts, and then followed by portfolio managers, others, and also actually mergers and acquisition analysts and corporate finance analysts like myself. We have approximately currently registered around 337 candidates spanning across level 1, level 2, and level 3. We see that in the future, we will have more balance in terms of the gender, and also we have more and more younger demographics within our membership. What I expect is that going forward, this kind of collaboration between ACCA and CFA can continue to be built and bolstered. We both serve our constituents, our members, by providing the best education that not only focus primarily on the private sector, on the profit-seeking organization, but also to contribute to the society at large. Let's go with the further collaboration, and I hope going forward, CFA Indonesia can also suggest more and more topical speakers from our side as well as the ACCA. Thank you very much.
Thank you so much, Tatiana. It's so glad to meet you again for the second time here, although we are seeing from our screen. But thank you so much for your warm welcome and also for your positive impression of our collaborations tonight. So now let's hear a welcoming remark from the director of Asia Pacific from ACCA, Mr. Pulkit Abro. Pulkit, stage is yours.
Thank you. Thank you, Julia. Good evening and welcome to ACCA CFA Society of Indonesia's webinar on the Introduction to Climate Finance. I'm pleased to send special greetings to our partners, Brenda Ho, CFA Senior Director at Partnerships and Client Solutions at the APAC CFA Institute, Pak Triyono Suredirjo, CFA Vice President as well as of CFA Society Indonesia, Esther Thng, our CF, also a charter holder, but also ACCA's Regional Head of Learning and Education for Asia Pacific, Julia Simatopang, Country Manager and Chief Representative of Indonesia for ACCA, Pak Rahmat Sugiono Halim, CFA Executive Director of CFA Society Indonesia. Friends and many colleagues who've joined us today, I'd like to start by congratulating all our colleagues who've worked tirelessly over the last year, so fruitfully as well, resourcefully, energetically, to create our course on climate finance. Additionally, to this groundbreaking collaboration, setting up a joint webinar today as an introductory to climate finance for our stakeholders together as two professional body societies in Indonesia. I know it's going to have a great impact and serve as a valuable resource for so many people who have ambitions to achieve more in the critical area of climate finance. Our numbers today may be small, but our ambition isn't. I also look forward to keen anticipation to our next and many, many future collaborations. And I really do thank from the bottom of my heart, Pak Triyono's mention of our collaboration in the future. I'd like to say a few words on why climate finance is so central to the times we live in and at the heart of all our goals, aims, and strategies right now. So much is described so clearly and compellingly in ACCA's recent study, Green Finance Skills, the Guide. It describes how professional accountants, finance professionals must help the migration to sustainable economies and businesses by being experts in climate finance, especially green finance. Looking around us today in our volatile economic and political landscapes, access to cheaper capital is central to our organizations and many organizations' long-term survival. Lenders are increasingly offering attractive green rates to organizations that meet sustainability requirements. So rather than a nice to have, green finance is emerging as a necessity, competitively priced capital that keeps businesses in business. And in that sense, climate finance is an engine of competitive advantage. By embedding sustainability into all activities, organizations will surely drive value creation. And who's going to make that possible? It is professional bodies like us, it is you who's going to do that. Every quarter, for example, when we run our Global Economic Conditions Survey by ACCA and the Institute of Management Accountants, New York, we have found over several quarters that organizations worldwide are attaching more importance to environmental factors, with their leaders anticipating significant change in business practices to meet net zero targets. Understandably, they need more support from their finance professionals to increase their access to green finance products that will underpin the transition to net zero. Businesses have told our researchers they do not know enough about climate finance opportunities and climate risk management. That's why our profession's ability to understand the green finance options needed for this transition are key to equipping organizations with this expertise. Having the skills to consider non-financial as well as financial business drivers will also leave the profession well-placed to lead in training staff, in developing the talent needed for enabling transformation and embedding sustainability. ACCA is proud to play a leading role in supporting finance professionals to help organizations develop well-structured and risk-reducing sustainable development initiatives and portfolios of greener assets. That includes our new climate finance course designed by experts from ACCA and CFA Institute in response to the demand for skills and training in this fast-developing area. We know, and we are already seeing, that climate change and the journey to net zero will have a financial impact on organizations' position, performance, and future outlook. The sustainability journey that organizations need to embark on involves defining net zero strategies and setting time-bound targets relevant to their value chain. Now, this isn't a choice that we all have. It's important for us to play our role. Now, why is that important? Simply because the precise costs of climate change and the net zero journey are highly uncertain. But it is only too clear that all economies and organizations will feel a hefty impact over the coming decades. The green transition, therefore, demands long-term financing. Green bonds, carbon pricing, and sustainability-linked loans or access to capital will all play an important role if we are to reach net zero as a planet by 2050. Not only do such initiatives create value creation, but also generate higher public trust in those organizations who are on this journey. Finally, and foremost, I'd like to thank all of you for taking the time and the trouble this late evening to bring your expertise and your experience to our event tonight. And many congratulations for everything that you've done. Sorry for the audio feedback. Many congratulations for everything you've done, everything you are doing, and everything I know you will continue to do in the future to advance the cause of climate finance and build sustainable businesses and economies that will offer a bright future to all people, whoever and wherever they are. I wish you a useful and a helpful, engaging webinar. Please do participate. Look out for the end for any resources that we're sharing with you. And many thanks to all of you. Thank you.
Thank you so much, Pulkit. We are really feeling so grateful to have you for this webinar. I believe every one of us now looking forward to the main session after this. But before we begin, let's hear from CFA Institute, the head of Partnership and Client Solutions for Asia Pacific, Ms. Brenda Hu, CFA. Brenda, I'm with you.
Thank you, Julia, and thank you, Pulkit, for such a motivational welcome address as well. Good evening, everyone, in particular, all the distinguished guests and also participants. I'm honored to welcome you all to this webinar tonight on climate finance, jointly and firstly organized by CFA Society Indonesia and ACCA. I'm actually very delighted to be given a chance to say a few words today and to re-share with you some of the key exciting missions that CFA Institute is driving. So CFA Institute is specially focused on educating and upskilling investment professionals to integrate ESG factors into the investment selection process. So as you all know that ESG factors are increasingly recognized as integral components of investment analysis. There's a growing demand for products and skills to support sustainable investing, and there's also concerns over greenwashing. All these have created a real and urgent need for finance professionals to develop a deeper understanding of how these factors are impacting the industry, our clients, and the world at large. Today's event is very meaningful. In particular, this is the first of its kind, the joint collaboration of CFA Societies Indonesia and ACCA. But more importantly, we gather here to discuss one of the most pressing challenges of our time, climate change, and its implications for the world of finance. As we navigate an era of increasing environmental awareness and sustainability concerns, the need for climate-smart investment strategy has never been more critical. At CFA Institute, we recognize the importance of equipping financial professionals with the knowledge and skills necessary to address the climate crisis effectively. That is exactly why we have partnered with ACCA to launch this special climate finance certificate. This climate finance course is actually designed by experts from both parties. This course provides an introduction to climate change and its related economic and environmental impacts, as well as climate solutions. It covers climate changes, carbon pricing, sustainable business models, and the climate risks and opportunities in the context of business, as well as portfolio constructions and investment analysis. This course is unique in its holistic approach because it represents topics from the perspective of both issuer and also investors. So it is actually very suitable for a diverse group of audiences. And recently, CFA Institute and ACCA took a step further in ongoing efforts to proactively support and contribute to the ESG capacity buildings, with the eligibility of these climate finance course candidates to benefit from the training subsidies under the Hong Kong SAR government's special schemes. So under these schemes, eligible applicants may claim reimbursements for up to 80% of the exam registration fee, and full-time students are even more better by being able to claim up to 100% reimbursements upon successful completion of the program. I know some audience are actually representing Asia Pacific today, and so if you do have like participants or your staffs or your members actually located in Hong Kong, they definitely can actually benefit from this subsidies from the Hong Kong government. So before we begin, I would like to express my heartfelt gratitude to our partner ACCA for the collaboration and shared visions in launching the climate finance certificates. I would also especially thank CFA Society Indonesia and all the volunteers behind, and also the staff there, and all participants, for participating us tonight. So thank you very much, and I wish you have a very fruitful and engaging webinars following up. Thank you.
Thank you so much, Brenda. So thank you so much to all leaders from CFA and ACCA. Truly appreciate the warm welcome message, and I hope everyone feeling more comfortable now. Because before we start to the next session, let's have a group picture all together. So I'll invite all the participants as well to open your camera. We're going to have one photo session with all of you.
Silakan ya, dinyalain kameranya, kita mau ambil foto bersama.
Can we close the screen sharing? Okay, again, I invite all the participants to open your camera. We'll have a photo group on 3. Okay, I hope everyone ready. 1, 2, 3. One more. Okay. On mark. 1, 2, 3. All right. Thank you, everyone. So before we start, I'd like to remind all of us with our webinar and Q&A rules. Of course, there will be a rule for this webinar. So as always, please write your name as register, and all participants will be muted during the presentation. And for the Q&A rule, this webinar pulls questions during the session for the Q&A later. But if you like to ask questions, you can write them in the chat box or on the Q&A section at any moment. You can raise your hand to be unmuted, and the moderator will address them subsequently during the question and answer. Okay. Before we welcome our speaker, let me share the profile of our speaker tonight. We will have Ms. Esther Thng. Esther Thng is the Regional Head of Learning and Education for Asia Pacific in ACCA, with education oversight in close to 20 countries. Esther designed education strategies and learning support for students and ACCA education partners. She has extensive experience in the accountancy education industry prior to joining ACCA. She's even a lecturer before becoming the academic director. And Esther has a degree in accountancy, and she is a CFA, called a Master in Social Science, majoring in Applied Economics. Then let's welcome Esther to the stage. Esther, this is yours.
Thank you. Thank you, Julia, for the introduction. And good evening, Bapak Ibu, ACCA members and future members, colleagues, fellow charter holders, CFA candidates, partners and friends of ACCA and CFA Society. Sustainability is increasingly on the minds of businesses, investors, national bodies, and governments. Today, I'm here to talk about a subset of sustainability, which is climate finance. We'll be going through climate finance at a high level to give you an overview and some key takeaway. I hope after today, you will find this topic interesting enough for you to want to explore more based on your area of interest. So my name is Esther. I'm the Regional Head of Education and Learning in ACCA, and I look after the Asia Pacific region. So let's get started. Next slide, please. I'm going to start by providing an overview of the momentum in sustainability, and we'll cover the points you see in this slide here. So the race to net zero continues with the support from various parties: governments, global financial institutions, capital markets, businesses, and accounting standard setters. Next slide, please. Private sector support in sustainability is growing significantly. The Glasgow Financial Alliance for Net Zero, GFANZ, was launched in April 2021, and as of 2021, it has 450 global financial institutions with asset worth over $130 trillion, and they have committed to finance the transition to net zero emissions. It has now more than 550 member firms in more than 50 countries. For a financial institution to become a member, it needs to join one of the 7 net zero sector specific alliances as shown here. Next slide, please. So $580 billion have been invested in ESG funds, and over $1.4 trillion of ESG debt have been issued, and it is projected that issuance could hit $3.8 trillion by 2025. Next slide. On the business sector momentum, more than 4,000 businesses around the world are already working with the Science-Based Targets Initiative, SBTI. Science-based targets provide companies with a clear, defined path to reduce emissions in line with the Paris Agreement goals. SBTI reported an 87% increase in companies setting science-based targets in 2022, more than the last 7 years combined. Asia growth was stronger at 127%, and we have 25 companies in Indonesia which are listed on the SBTI target dashboard. Next slide. Over 3,900 organizations have now pledged their support for the Task Force on Climate-Related Financial Disclosure, TCFD, growing from 2,600 in 2021. TCFD was created by the Financial Stability Board to develop recommendations on the type of information that companies should disclose to support investors, lenders, and insurance underwriters in assessing and pricing risk related to climate change. The International Sustainability Standard Board, ISSB, has issued in June this year its inaugural Sustainability-Related Disclosure Standards, IFRS S1 and S2. Both standards fully incorporate the recommendations of the TCFD. Next slide, please. And in ACCA, we have partnered with ISSB to produce a series of videos to explain the recently published IFRS S1 and S2. You can find these videos on our ACCA Global website. And it is also worth mentioning that the CFA Institute has developed a global ESG disclosure standards for investment products. Next slide, please. "193 states plus the EU have joined the Paris Agreement. The European Union has introduced the Green Deal to make Europe the first carbon-neutral continent by 2050. Various countries have also made commitment to achieve net zero, including Indonesia." Next slide. The Paris Agreement sets long-term goals to guide all nations to significantly reduce global greenhouse gas emissions, to limit the global temperature increase in this century to 2 degrees Celsius, whilst pursuing efforts to limit the increase even further to 1.5 degrees Celsius. The agreement is a legally binding international treaty and includes commitments from all countries to reduce their emission and work together to adapt to the impact of climate change. Next slide, please. The main human-caused driver of global warming is the rising emissions of heat-trapped greenhouse gases. These greenhouse gases trap heat in the atmosphere, raising the temperature. Carbon dioxide, or CO2, is the most significant contributor to the warming effect due to its higher concentration in the atmosphere. CO2 level in the atmosphere has bounced between 200 and 300 parts per million and was at 415 parts per million and rising. Next slide, please. Carbon footprinting is one of the most common approaches used by companies and investors to map out and analyze environmental risks and costs. A carbon footprint is the total greenhouse gas emissions caused by an individual or an organization or a product or a portfolio, and is expressed in carbon dioxide equivalent. The use of carbon footprinting applies the International Accounting Tool of the GHG Protocol standards, which allow for the measurement and management of greenhouse gas emissions from private and public sector operations. It identifies 3 types of greenhouse gas emissions and provides guidance for measuring and reporting them. Scope 1 emission are direct emissions that occur from sources that are controlled or owned by an organization. Scope 2 emission are greenhouse gas emissions with the purchase of electricity and other energy purchases. Scope 3 emissions cover all indirect emission arising from the activities of the organization and includes emission from both suppliers and consumers. Can you tell? Thank you. In a study done to examine the reporting, can you go back to the next slide, please? Thank you. In a study done to examine the reporting of Scope 1 to 3 emission of companies listed on the various ASEAN stock exchanges, it was found that the number of entities reporting Scope 2 emissions is generally higher than the entity reporting Scope 1. And this can be explained by the fact that measurement for Scope 2 emission generally require fewer inputs. The number of entities reporting Scope 3 emission, which are not directly produced by a company itself, is significantly lower, as you can see from the graph here. The market consensus is that Scope 3 emissions are generally more difficult to measure. Next slide, please. A powerful tool in combating climate change is putting a price on carbon. Putting a price on carbon emission can incentivize a move away from burning fossil fuels. Carbon tax and emission trading scheme, ETS, are the 2 examples of carbon pricing mechanism. The graph on the left shows countries at different stages of development with regards to the use of carbon tax and/or ETS. A carbon tax sets an explicit price on greenhouse gas emission. A fee is placed on carbon generating activities so that both industry and consumers have an incentive to substitute cleaner energy solution for fossil fuels. ETS place a limit on total emissions, but allow participants to trade permits and credits for carbon use, thereby setting a market price. It sets a carbon budget for a market, and permits to pollute are sold to users. Companies must buy permits to emit CO2 above the level established by the cap, and these permits can be traded on the secondary market. And the cap on emission is lowered each year to incentivize a lower use of carbon-intensive processes. The price chart on the right shows a trend of carbon prices over the last 3 years. The benchmark EU allowance contract rose above 100 euros per ton in February this year, and it is now at high 80s. In the case of Indonesia, Indonesia has enacted a law in 2021 that pledges to implement a carbon tax by 2025. And in February this year, the Indonesian Ministry of Energy and Mineral Resources announced the launch of a mandatory ETS for the power generation sector. Next slide, please. Now, moving on to climate finance products now. Climate finance refers to local, national, or transnational financing that seeks to support mitigation and adaptation actions that will address climate change. We will look at a few of the climate finance products here. The first one is green bonds. Green bonds are bonds issued to fund new or existing environmental and climate projects. An example was a 12 million baht green bonds issued by Global Power Synergy in Thailand in June last year. The use of proceeds of this issuance are to invest in renewable energy projects and to refinance the company's existing loans and the group's green projects. The offering was oversubscribed by 2.3 times. The next one is sustainability-linked bonds and loans. So these are loans and bonds issued with performance targets. If the targets are missed, then the bond or loan is subjected to a step-up clause that raises its interest rate or coupon rate. An example is the nearly $2 billion sustainability loan obtained by Olam, announced in August last year. The interest margin on the facility is linked to the achievement of sustainability targets across environmental, social, and governance areas. The third product is green investment funds. Can we click on the green investment fund? Thank you. So green investment funds invest only in companies and projects considered to be environmentally and socially responsible. Some of the biggest names in ESG asset managers are BlackRock, DWS Group, and Partners Investments. Collectively, the top 100 funds have total AUM of about $441 billion. Next slide, please. So globally, green bonds account for the largest share of the green finance markets. The first green bond was $440 million and it was issued in 2008. And since then, the green bond issuance has increased substantially to $487.1 billion in 2022. And that's using the data from Climate Bonds Initiative. The decline of debt issuance, as you can see on this graph, in 2022 was caused by energy price increase due to the invasion of Ukraine, thereby driving higher inflation. Next slide, please. And now looking at ASEAN itself. Reflecting the adverse market condition of rising inflation and interest rate, the ASEAN sustainable finance market contracted in 2022, just like the global scenario. However, volumes was at $36 billion, almost twice the level of 2020. Loans remain the most popular debt instrument in the region, with sustainability-linked loans, SLL, comfortably at the top, and green loans exceeding green bonds and green sukuk. Can you click onto the next graph? Thank you. So these are most used instruments in Singapore, Thailand, and Vietnam. Sukuk, however, dominates in Indonesia and Malaysia. Next slide, please. So the CO2 level in the atmosphere is rising. A hotter planet means more droughts, more famine, more extreme weather conditions, and also more property damages. The investment professional needs to incorporate these climate effects into their analysis for capital to be allocated efficiently. The CFA Institute and PRI has developed an ESG integration framework, which is available in the climate finance course created through a partnership between the CFA Institute and ACCA. Integrating ESG, understanding the risk and opportunity that climate change brings, can be applied at an asset level and also at a portfolio level. Now, more details on integrating climate risk into investment analysis and portfolio management are provided in the climate finance course. In view of the time that we are given, I will not go through this area in details here. Next slide, please. The research for Global Economic Conditions Survey conducted by ACCA and IMA found that organizations around the world are attaching more importance to environmental factors, and their leaders do anticipate significant change in business practices to meet net zero targets. And therefore, they will need support from their finance professionals to increase the access to and awareness and knowledge of green finance products that will underpin the transition to net zero. However, we also found that ESG skills gap is sizable for both SMEs and large corporates. Only 38% rated their knowledge and 41% rated their skills as good or very good. So there is a need to increase the ESG knowledge and skill set. Next slide, please. Now, if you wish to know more about sustainability, we have produced various sustainability-focused research insights, and what you see here is a sample of reports that we have. Next slide. As mentioned, the CFA Institute and ACCA have created a course in climate finance. This course provides introductory knowledge in the space of climate finance and its related economic and environmental impact, as well as climate solutions. Next slide. In this climate finance course, you will be introduced to key elements around climate change, carbon pricing, sustainable business models, and climate risk and opportunities in the context of business, as well as portfolio construction and investment analysis. It is an online course and self-paced, which therefore allows you to fit your learning into your work and personal schedule. You will gain a vital understanding of the main issue faced by the finance sector in light of climate change. It equips you with the practical skills to use the knowledge to shape forward-looking financial models, reports, and portfolios. Next slide. So let me go into a bit of detail with regards to the course. So the entire course covers 6 modules and take up to 10 hours to complete. In the first module, you will gain an overview of climate change and its effects on the financial world. In module 2, you will learn about international climate policies and agreements and the governing bodies that enforce them. You will also gain an understanding of corporate climate standards and disclosures. In module 3, you will learn about reporting of carbon emissions. It gives you an invaluable understanding of carbon pricing as well. In module 4, you will understand how to conduct business and shape value chain in a way that's both sustainable and beneficial for your organization. Module 5 is a practical focus module, and you will discover how to use your knowledge of climate risk to inform investment and uncover new opportunities. In the final module, which is module number 6, it will give you the skills to shape successful portfolio and financial models. Next slide, please. And this is my last slide. So if you have question or comment, these are our contact details. Thank you. And I'll hand the time back now to Julia.
Thank you, Esther, for a comprehensive exploration of what is climate finance and, of course, about the climate finance certificate. I think it is very important that everybody should play a part in tackling the issue of climate change nowadays, including us, accounting and finance professionals. So thank you very much, Esther. We are also glad to know that ACCA and CFA Institute are putting forward climate issues and coming up with the certificate in climate finance. So as we move ahead, I invite all participants to engage in the question and answer session. I believe your questions will enrich our dialogue and enhance our understanding in the spirit of helping to manage the climate risk. So I would like to start with picking up 2 questions, Esther. I have a direct chat. The first question, I will read it to you. What are your comments on greenwashing in the finance? So that's the first question. Would you like to answer that first?
Yeah. Yes, I think we have heard of the term greenwashing. In which case, that's where having a taxonomy is important, so that we know what product or what activity are considered as green and what are considered as brown. And I think in this case, Indonesia has also have its own taxonomy. Yeah, thank you.
Thank you. So I hope that answers your question for the one who put the question. And the next one, Esther, I think this is something that everyone would like to hear from you. What are your advice for accounting and finance professionals to implement climate finance in their role? I think we can be more general, because I believe all of us have different roles. But I guess Esther can share your advice for accounting and finance professionals to implement the climate finance based on what you're sharing tonight.
Yes, I think for accounting and finance professional, definitely with a key role to play, given we are very conversant with financial numbers, and therefore at the same time we can also deal with non-financial factors. So in the case of accountants and finance professionals, I think first of all, in order to incorporate whether it's a climate factors or ESG factors in general into the organization, I think first of all, we need to ascertain the ESG maturity across the organization, and then look at what are the business drivers and the financial and non-financial requirement related to sustainability. And as well, we need to know need to be able to define what are the sustainable business models, the approach to embed sustainability best practices across the organization. Also, you need to have ESG strategies and net zero strategy to be implemented within the organization. Then, of course, to finance these strategies and to move towards a sustainable business model, you may need financing. So that's where you may need to source and manage green finance products, and also perhaps create a portfolio of greener assets, and then subsequently monitor the ESG impacts. So I think that would be some of the areas that accountants or a finance professional could support the organization moving towards a more sustainable organization.
Great, fantastic. So again, I invite all of you, if you have any questions, you can write them in the chat box, or you can also raise your hands and we can unmute you. I'll see.
Julia, I saw a question on the chat. Right. How much there's an overlap with the CFA ESG course? Right. I think for this, maybe the best person to answer would be Brenda, since the CFA ESG course is developed by the CFA Institute, and this is then the climate course is a collaboration between us and the CFA Institute. Brenda, would you like to take this question, please?
Yes, just want to, can you hear me good? Sorry, can you hear me good?
Okay, so the question is, may I know your opinion on how much overlap the course with CFA ESG course?
Okay, yeah. So thank you for asking this. First of all, and we are happy that you're also aware that CFA Institute also offer another certification, which is called the ESG investing certification. So as you know from the names of it, this ESG investing certification actually is covering a much broader topics about ESG. And in particular, when we look into the certification, it is a much more deeper in terms of the times of the study and also the breadth of that. So I would assume that for people who are interested in ESG certifications, it would take around like 100 to 120 hours of study compared compared to what Esther just mentioned about the climate finance certifications, it's much more like a condensed way. And on itself, the nature of the climate finance certification is very particular, zooming to climate finance, like climate change. So it's more or less like a subset of the ESG, the E part of that. So I would say, like, if you are the professionals that is working in your function where you particularly zoom into the climate finance or climate change aspect, so I would say that climate finance will be more like a bite-sized, easy digestible introductory course for you to understand a much more like a specific topics around the climate change and implications to the climate finance. But if you are actually covering much more broader in terms of portfolio management, where you need to tackle much more broader topics on ESG, then I would say that the ESG certification will be much suitable for you. And the level of overlapping is actually, I would say, like it's only part of the ESG certifications will it's actually covered by the climate finance, and the angles of that is actually a little bit different as well. So it really depends on how you want to project yourself into learning the topics about the ESG. I would say, like, the level of overlapping is not a lot, but if you have limitation of time, but you're particular related to the work, or your interest is related to the climate change, I think that the starting point is really the climate finance certification, because it's only investing around 10 hours of time. So once you explore that, you're really keen to further pursue much more broader knowledge, then you can consider ESG certifications. Hope that I answer your questions then.
Thank you so much, Brenda. I hope that answered your question. Vishnu?
Yeah. So Julia, maybe if I just add, since I actually did both, so I think Brenda is quite rightly to point out, the amount of time investment you put into both certificates and the difference of both. In the case of the climate course, I could do it within 1 week, sitting at my desk and devote the whole day to study it. So if you are running short of time, but you do want to have, knowledge with regards to climate finance, that I would think that is the ideal course for you. Whereas I think the ESG course has got coverage beyond E. It has got G and S, and therefore you also take a lot more time to complete the course. So I guess, first, I think one is your time consideration. Secondly is your focus area. In the ESG course, there's also a lot of devotion towards investment valuation and portfolio management. So again, if you're not from the investment management community, and that is not your interest area, then I would think that the climate finance course would be more suitable. But of course, if you are someone looking at investment analysis, portfolio management, and you need to know a lot more, then the ESG course might be more suited for your purpose. So I guess it depends on your time, it depends on what are you looking for. Thank you.
Great. Thanks, Esther. Okay, I think due to the time constraint, so I think we are moving to the last part of this enlightening webinar. Again, I want to thank our speaker and also our friends from the CFA Institute and CFA Society Indonesia. I believe our engagement today underscores the importance of collaborative efforts in addressing climate change through financial innovations. Again, thanks so much. And here we go for the closing remarks by Charles Jones from ACCA Institutional Partnership. Charles, the station is yours.
Thanks so much, Julia, and I hope everybody can hear me. And for those in Indonesia, Selamat Malam. I hope my full Bahasa is well understood. I've only tried it a few times when I've been to Indonesia, so please do forgive me if it's not quite right in terms of pronunciation. I wanted to close off today with a slide, if we could move just to the last slide here. And I want to sort of reflect a little bit in terms of the webinar. It's obviously been fantastic, and a big thank you to all the speakers and all the great questions. And it's obviously such an important topic that we've covered. And obviously there's a great product offering that's available to our members, both CFA and ACCA, which can support our learning and also enhance our skills. And the CFA president today talked about more collaboration in Indonesia, and I want to use that to just look beyond today's webinar to consider how we're collaborating with CFA Institute and CFA societies globally. And in relation to Indonesia, how we're working together in the APAC region. And you'll see from the slide there that the groupings of countries in red, which are those we have a relationship with, are very significant in the APAC region. And you'll see from the slide that we've collaborated at a global level with the Green Finance webinar. And also next month in Hong Kong, obviously Brenda referred to the government subsidy scheme, where we're going to be doing a webinar which talks about that. And also we've set up a webinar for the Philippines, which will be similar to today's, and will also feature Esther, which is great because I think Esther's provided some really great content and insight today, which has led to obviously a great webinar. And I think there are in fact many other areas of collaboration within the APAC region that are happening and beyond this slide, which I think is fantastic. And I think there are obviously an extensive number of countries where we're connected, but importantly, where are we not? So where are the countries in APAC where we could connect and work together much more closely? And I consider today a number of the CFA Institute and CFA Society individuals on the call today co-workers for me. I've been working very closely with Rosina and also Brenda. And I'm looking forward to us working together more to develop more opportunities and potential so that we can have more events in Indonesia, but also connect those into the ASEAN and the wider APAC region. And really considering those last 2 points, I guess I have a bit of a call to action, which is that as ACCA and CFA members or stakeholders, if you have any ideas on how we can collaborate in your market or your region, or you want to get involved more closely in future activities and events, please do get in touch with the relevant ACCA team in your regional market or CFA society, because I think it's very clear that there's some great potential for how we can work together more closely. We've got a great foundation with which to do that. And there's so many different ways of looking at it. How could we look at some ASEAN events where we bring Indonesia and the other ASEAN markets have a focus, as well as APAC as well? So some great foundations, and as I said, it's very much also down to hearing from all of you as well. We've got an open door to hear about how we can collaborate further. So with that, I'll round off, and again, thanks everybody, and thanks very much, Julia.
Terima kasih, Charles, for your closing remarks. So now we have reached the end of our webinar, and on behalf of ACCA, CFA Society Indonesia, and CFA Institute, we'd like to thank you for joining us now. Let's carry forward the knowledge gained from today's event and translate it into impactful actions by sign up to ACCA and CFA Institute Climate Finance Certificate. So I'm Julia Simatupang, and I'll be signing off. So have a lovely night, everyone. And remember, our actions today shape the world of tomorrow. Goodbye.
Thank you, Julia.
Thank you.
Thank you, everyone. Bye.
Thank you, everyone. Bye.